So the Biden bump becomes the COVID vaccine jump today as markets jump to new all-time highs. Hey guys, Tom Gentile. Welcome to Tom's Trading Room right here in the podcast. I had other things planned for today, but Pfizer made the news, and I want to talk about Pfizer. I want to talk about the overall markets. I want to show you something called Market Overview that I use to quickly scan today's top and bottom trades. But we really want to talk about Pfizer, and is there any opportunities in this stock, not today, but heading into the end of the year. So let's jump to my computer, which is right there. You can't see it, but you will. And let's get started. I'm over here and I'm at Tom's Tools, and I want to navigate through a couple of things to show you how I look at these opportunities. The first thing I want to do is go to charts. I'm going to go to stock charts. And what I'm going to do is I'm going to look at the overall markets real quick. Most importantly, this is the 20-day chart you see here of the S&P 500. Now, remember I talked about the Texas two-step? What I'm talking about is the market was just so excited about what was happening this morning that they bought it right at the opening. There was a huge amount of volume going in, but the market's been selling off ever since. And now, even though we opened up here near the 364 area, we traded down below 360. So there is some sell-off on the news, right? If we were to look at, say, the bond market, you can see that the bond market has definitely been selling off because nobody wants to hold bonds right now while the stock market's on fire. Okay, what about the cash market? Well, the cash market was actually showing signs of life this morning. Even though it opened lower, cash has been being accumulated throughout the day. This could be a sign that the stock market really is overdone, as traders who were long this morning got short and possibly put their money into cash for the short term. Take a look at oil. You know, we've been bearish on oil for quite some time, and oil USO had gone down below 25. But when you get news that a COVID vaccine is here and that it's coming, this is a game changer for markets like the travel industry, airline stocks, stocks like Booking.com. All of these just woke up. And their stocks, there's companies that are on the verge of bankruptcy that are now seeing new life. Well, a lot of those are oil and energy related, as you can see here with USO, with this big gap up from the close on Friday at 26.5 to now trading back above 28. When we move forward, we see this, and then you see stocks and ETFs like GLD, where there was a big rush to the door. As soon as gold traders heard that a vaccine was out there that was actually showing some huge promise, they sold gold, and gold gapped down. GLD actually closed above 183 on Friday, opened at 176.5, and just sold off from there. Now, what we do see with gold is we see support at around the 170, 169 area, and that's where the big support seems to be. So it wouldn't shock me if we end up moving lower on gold for the short term. However, I'm still a long-term bull on the shiny yellow metal. Now, let's go ahead and move forward, and I want to talk about what I call the market overview. You know, we could look at stock after stock, but we don't have enough time to do that on a video like this. So I'd rather send you into where all the action's happening. And for that, what we do is we're going into an area called market overview. So in the stock area, I go down to stock analysis, and I have a button called market overview. And what I'm going to do is I can use this on any stock list I want, but I'm going to look at the S&P 500 because that's where most of the action's happening for today. We're going to look at the change, and we're going to look at both the bullish and bearish directions. So let me click on the search button and get this thing going. And as you can see, it doesn't take long. Booking.com in the S&P 500 is the stock that is moving the most in point range today, as it is up near 300 points. But if you look along this list, you'll see stocks that seem to have the same vibe I'm talking about. These were ones that were once battered and bruised that are now coming back. Stocks like Ulta Beauty, which is up 36 points today. Now, Google has already been on the rise. It's just extending its rally. But I'm talking about stocks like, if you take a look at Expedia.com, Wynn, which is Wynn Casinos, moving along on this list, and you'll see in here not only casino stocks and travel stocks, but you also see, here's Royal Caribbean here on this side, but you'll also see stocks like JP Morgan, all right, PNC, I see a lot of stocks that are bank-related stocks that are also exploding on this news as well. That's the positives. Take a look at the negatives. All I've got to do is just change direction and hit that search button again. And these are the big ones heading down. Amazon of the S&P 500 is down nearly 80 points today. You know, when you look along here, you can see stocks like Adobe, PayPal, which PayPal has really just given up a lot of the gains that it had just last week. But even stocks like Lowe's Home Improvement, Costco, Home Depot are also down. And these are stocks that are down but not out. It's just now we're seeing a quick rotation out of stocks and companies that worked during the pandemic that will still continue to work but could present a buying opportunity right now. So the big news out there is Pfizer. And again, Pfizer's got early analysis that is showing that its vaccine is better than 90% effective. Now, obviously, we need more time to make sure that that is absolutely correct, but it's fantastic news for the markets. It's fantastic news for the economy. It's fantastic news for the world. Now, let's take a look at Pfizer and see if there's some opportunity that's just as fantastic for you and I, the investor. So now, take a look here, what I'm looking at with Pfizer. We can take a look at a stock chart first. So if you take a look at PFE, once again, PFE was really kind of bottoming down here around the mid to high 30s. And then came along Monday morning at 7 a.m. when they released that announcement. And we're talking about a stock that was at 36.5 on Friday and opened above 41.5, traded as high as 42, and then dropped down to 38.5 before regaining some of that momentum. Here's the thing. Everybody ran into this stock early in the morning and overpaid for it. It has pulled back. Again, is there opportunity for the option investor that is bullish on Pfizer? I believe the answer is yes. Let me show you a couple of ways you could look at this going into the end of the year. So let's take a look at the option tables. And you can see with Pfizer, and I'm going to update this to the most recent data we've got. You can see that Pfizer, calls on the left, puts on the right. We're going to go into the calls, and we're going to look at call options that are at to out of the money. Stocks trading above 40. We know the 40 calls, these are the December 18th year-end options. The December 40 calls are trading right now for about $1.88. So if we were to buy the December 40 calls, and I'm going to click on risk graph, I'm going to see, again, how much am I paying for these options? $1.88 or $188 a contract, right? I know that. There's a little bit of slippage in here, but if you were to pay $188 on these calls, we know they have unlimited profit potential. We know they have risk of $188, and that's if Pfizer is at or below 40 by December 18th. But what if Pfizer goes to 45? All right, what if we can get up to the mid-40s within the next 5 to 6 weeks? Here's what could happen. If you look at the risk graph below, we can see that if the stock is priced around 45, that puts us right out here at a profit potential that is going to be somewhat significant. 45 actually puts the 40 calls being worth $5. If you paid $1.88 for them, you're talking about somewhere around the neighborhood of $3.12 profit, or $312 profit if we were to hit 45 on or before December 18th. Now, that's well and good, but we also have all this risk out here, which may not seem like much if you're looking at $1.88. But remember, the options implied volatility on Pfizer rose today because of the news. So if you're looking for a way to hedge your cost, hedge your risk, lower your break even, take a look at this. Instead of buying the call option, perhaps we go back and we look at a call spread. And a call spread involves buying the lower strike option, and that's what we're going to look at here, the December 40. But let's look at selling the 43 calls. So if I come out here and I sell the December 18th 43 calls, buy the lower, the 40, sell the higher, the 43. The 43 calls are bringing in 86 cents right now. 86 cents is not quite, but nearly half of what we're paying for. So if I go and click on a risk graph of this bull call spread, what we're going to see is this. First, we're paying $102, not $188 for the spread. That is the right to buy the stock at 40, but being obligated to sell it at 43. Now, I would love to buy Pfizer at 40 and be forced to sell it at 43 all day long, right? That's what this particular trade allows us to do. So if you take a look at it a little bit deeper, what we notice is this. I'm paying $1.88, I'm bringing in 86 cents. That's where we come up with $102 per spread contract that you see there. Now, the most we can make on this trade is 198, nearly 200%. And here's the best part. Pfizer only has to go to $43 or higher in order to get that on or before December 18th. Now, obviously, the closer to December 18th we are. If we're at or above 43, the closer we're going to be to that magic number of nearly 200% return. But looking back once again, the risk graph looks like this. Notice this, much less risk, all right, being down here near 100. That's the worst that can happen if Pfizer turns around and runs back down. But if they truly do have something, this vaccine, more than likely this stock is going to trend up. And if we just get above and stay above 43, by December 18th, you have almost a 2-to-1 reward to risk ratio. Here's the best part. Take a look at the break even at expiration. Now, the break even on the 40 call, if you take 40 plus $1.88, is $41.88. But if you do the spread, the break even is $41.02. 102 is what you're paying for the spread. You add that to 40, the lower strike, and what you have is your downside and upside break even. Hey, that's it, guys. Thanks for joining me. If you like this video, show me some love. Hit that like button below. Also, subscribing to the channel and dinging the bell will get you these videos the instant they are uploaded. Thanks for joining me. We'll see you soon. Bye now.